Hey, welcome in. You're listening to another daily editorial on the Korelin Economics Report. Big Al is recording this along with his friends Steve, Carter, and Corey at the Cambridge House World Investment Conference. I got to tell you, this is a great venue. We come here every time they do it, which is twice a year, as does my friend, colleague, etc., Peter Grandich. Peter and I are chatting a little bit right now about economic issues. We're talking a little bit about societal issues. We do it every week on the radio program. The reason we bring those two topics together, for lack of better terms, is because I think there's a huge correlation between what's going on in society and what's going on in the markets. And I know that Peter would agree with that. Pete, we have an interesting situation right now. Last Friday, gold closed up a little over $60 an ounce. Silver was up close to $1 an ounce. The conventional markets, as you and I have talked about for quite some time now, we're all in the red. The Dow was down Friday. They erased any gains that it had made so far this year. It's hard to predict the future, but in my opinion, based on fundamental reasons, I think we're going into an uptrend in the metals markets and a downtrend in the conventional markets.
Well, I concur more on the first than the latter, and I'll tell you why. As you know, I'm an ardent gold bull, not because I have any ammo or dry food or cabins in West Virginia to sell, but the fact is there have been great fundamental change that you and I have talked about over a while. They're still in place.
That's right.
Friday was an indication of them.
I would agree.
So I really don't have any fears personally, and for my own self-interest and investments, that the metals are going to go higher. Gold will take out the high of last September and will print with a 2 number in front of it. Don't ask me the date or time or what happens between here and there, but I believe it's coming. I'm not as convinced, although outright bearish and looking for bad markets, that the U.S. stock market is going to go sharply lower from here, and let me tell you why.
Yeah.
I have no doubt in my mind, can't assure that to your listeners or anybody, but in my own mind, that we are going to see something equivalent to whatever would be called QE3, and in a big way, and I believe it's going to coincide with a big move in Europe, opening and actually selling euro bonds and what have you. And they'll flood the markets again with liquidity. And as Wall Street is very good at doing, they'll take full advantage of that, convince everybody that's the tonic it needs, and there'll be a rally. After that, I concur, we'll eventually be even lower than we are today.
You know, what I find to be interesting is, and I did an editorial on this yesterday, Saturday, but Seattle Times headline, front page headline on Saturday morning, basically one of their financial writers basically totally lambasted and totally debunked, for lack of better terms, the employment numbers that came out the prior day, okay? And he said, this is ridiculous. These numbers don't make any sense. They totally don't. They really don't describe the problem as it exists. And what he said by that is, he said, number one, all of the jobs that were gained were in either the part-time sector, or the dramatically underemployed sector. Point number one. Point number two, he said when you look at U6, which is unemployment plus the amount of people who are significantly underemployed, okay, that rate right now is 14.8%. That's not going to turn around, and that's why I think that the markets may not do as well as you're predicting.
Well, I didn't say as well. I'm not looking for it to go up incredibly. What I'm just saying was I don't think there's going to be a big downfall after the next few weeks, because I see the Fed going into almost a crisis easing mode. I think it's almost certain. It's about almost as certain as, when we get up in the morning, the sun hopefully will still be there.
Yeah.
That we are going to see another, call it anything else you want, but call it QE3. And with that, and the fact that the market now has been sold back to, like I say, where it was a year or two ago, the S&P has pretty good support around 1250. Okay. I don't see it going through that. I'm not a bull. My advice to people over the last several months is sell into any rally that we have. But I also don't think you should make a bet of a substantial fall anytime soon.
Time is going to tell, as it always does. Pete, always a pleasure. You guys listen to Pete. He's going to be on the weekend edition next Saturday. Peter, thanks so much, my friend.
Thank you, Al.